Hi everybody, this is Brandon from Galaxydoc Market. Today is June 30th, last day of June 2024. It's about 11 a.m. as I make this video, and we are looking ahead, and there's a lot of things to talk about, partly about what's happening in the market, but my title today is Stock Market Crash Probability Continues to Grow. And so let's move forward. Here's the disclaimer. Pause it, read it, and move forward if you agree. And of course, my shameless plug about the Twitter account. Thank you so much. We are slowly but surely growing, and there's a lot of great contents up there in real time. Obviously, our membership group gets those analysis faster, but it's still worthwhile for you to follow, and I think it will help you with trying to figure out this Frankenstein of a market. All right, so housekeeping items really quickly. 4th of July is a banking holiday, and once again, for whatever the reason, it's in the middle of the week this week, and that's going to put a lot of constraints in the range of the stock moves, and it may be muted. And also, July 3rd, Wednesday is a half day, and July 4th, the market is closed. And if you noticed, you'll probably notice that's why the options premiums were a lot cheaper than you thought, right? So just want to remind you, the markets tend to be choppy and narrow. It doesn't mean there won't be any trading opportunities, and I expect some choppiness, but it's going to be range bound heading into the holiday with a slightly bullish bias on Friday. Just keep that in mind, okay? So if you guys have bearish positions expiring this week, you might want to take care of it before Wednesday is over. A lot of people are saying my videos are way too long, but good percentage of you, more than 50 to 60%, are saying they enjoy the length and the content. So, but I'm going to try to keep it short. But here's basically what I'm going to give you. S&P 500 Nasdaq is losing momentum at near all-time high. We will be discussing that, and then we'll talk about some of the developments in the news cycle. Mainly using Twitter now, and bearish candle formations, we'll discuss those, and then of course we're going to review our macroeconomic indicator review, and I think this is what I'm known for, and divergences are now playing out, so we'll talk about those divergences as it relates to these various macroeconomic indicators. Of course, we're going to do my becoming famous sector analysis. A lot of ideas can be gleaned from this sector analysis, so we will continue to do that, and it's important that you do the sector analysis. I tend to focus on the S&P 500. Of course, we're going to do technical analysis of charts, and especially of the S&P 500, and then of course we will summarize everything and what my thoughts are, where we are in terms of the market cycle, and I know this is what you're looking for the watch list. And for those of you that follow my watch list, you can't get this type of watch list anywhere else, and we'll talk more about Nike a little bit going forward. Now, fear and greed index, it's kind of becoming old news, right? Markets are hitting all-time highs and just chopping out above there, but yet the fear and greed index continues to show fear, maybe a little bit improved from last week. So this is last week right here, and this is ending this Friday on the 28th. It's a 44 and 41. This thing should be pegged at extreme greed level, right down into this area, but it's not. It just isn't. And so we will discuss why that is, and the amount of manipulation that's going on in the marketplace. It's no secret anymore. I don't think the Fed or the central banks, or Fed is the central bank, but the banks, the big banks, really try to hide it. Folks, we are USSR all over again. So, that's what it is. And, I just don't think the Federal Reserve, there's nothing federal about them. I mean, it's a private bank that somehow has received the ability to control monetary policies. And you go figure on that one. And so when the markets are manipulated to this degree, then you're going to see these types of major divergences, and any type of intervention is not going to last forever. And let's move on forward to the next one. And we're going into the news cycle. if this hasn't scared you, I don't care if you're a Democrat or a Republican, independent. I'm not political. I just tell you what I see. I'm not sure what I am anymore. I used to be Democrat at one point in my life, and I used to be a Republican at one point in life. Both sides sicken me, and we need some change. But this is a very scary expression, and people are delusional. Folks, wake up! All right, that debate, I don't think that was by accident. Okay, I think there's something more sinister headed our way, and you need to pay attention to what happened. But this guy, I don't know. I mean, there's a lot of calls out there for potential elder abuse and everything. I just felt sorry for him. I don't care if you think he's evil, if he's good, if he's great. But that is very scary. And with this world being more and more violent towards each other, it is something that makes you sit there and pause, okay? And now they're going to discuss the future of his campaign, but what future is there? I mean, has the Democrats have any type of credibility left? And what does it say about the state of our country, the economy, as well as the global world governments? What are they thinking about us? It was just an absolute clown show. I walked out of there not feeling like one way or the other. I just walked out of this feeling scared. Okay. And there's something sinister headed our way. I'm not sure what that is. Of course, when you have people like that running our country, then, the MTA subway tracks in Queens are being held together by zip ties. And that's because, nobody knows how to balance the budget. Fed or Reserve Bank is saying that they are concerned about inflation, that they're fighting inflation and job growth. Yet Rome is burning, folks. This is kind of the microcosm. It just kind of made me sick to my stomach knowing that this is happening while we're sending billions and billions of dollars to Ukraine and trying to start wars. And we have that guy, basically at the helm. But just know that I do believe this is all by design. All right. So, and I think this is by design too. Okay, nothing was solved in 2008 financial housing market crisis. All they did was do quantitative easing, easy money, printing money to oblivion. I mean, what are we at? Like 38, 39? Probably going to exceed 41 trillion in debt, right? That's just insanity. And then that caused the 0% interest rate caused massive participation by the hedge funds, private equities, big banks, and they bought up these homes and basically sent the home prices in the stratosphere level where most people cannot afford housing. And folks, this is by design, right? They're trying to hyperinflate out of this debt mess, and then this is what we get. All right, it's no surprise to anybody. This is going to put a lot of stress on the banking as the foreclosures start coming in. Remember, consumer demand destruction is real, and the destruction of the middle class is real. And then, of course, on June 18th and June 28th, I'm sorry, oh my God, I had a Joe Biden moment there. But the main takeaway is that I've been talking about Nike for a while, and this is part of my consumer demand destruction complex right here. And go to x.com, put this hashtag in. You can follow all of the analysis, and this is by no surprise. I do believe, and we'll talk about this a little bit, that Nike is headed lower, much lower. But that's topic for another day. Nike's earnings report and their conference call was even more disastrous. Okay, people simply aren't buying their crap and their legacy old stuff at inflated prices anymore, and so that's what we have. Okay, let's go into sector analysis. And so this is what I like to do. And all of the sectors in the S&P 500 is signaling bearish formations, right? Bearish candles. And this is why I'm saying the probabilities are growing. I mean, it's like last Friday, everything thing is putting in a reversal candles, okay? And if you want to know more about these reversal candles, you know, you need to educate yourself. Maybe consider joining our membership group or whatever the case is. But these are not good signs, folks. They are stalling. They are stalling and stalling and stalling. The only thing that's doing well, consequently, I just talked about real estate, is the real estate sector. That's because it's being propped up by the central banks, okay? And then we'll talk more about what's happening with the banking sector. And I've talked a little bit about you know, the rig job that's happening, and they don't even try to hide it anymore. So let's look into this sector analysis and see what we come up with. All right, let's go real quick. What we've got is at the top, and I like to, it's by no means a promotion of stock charts, but stock charts has made me successful over the years, and I just keep with it because I'm old, and I've been doing this for almost 35 years. July 16th will be my 35th year of trading. But the scooter, it has basically given me a bird's eye view of what's going on. And so right now, the two strongest sector really, and then here's the intermediate ones. These are losing steam down here, okay? Losing steam is the technology and communication services sector. And we're going to dig deeper into that. And then, of course, the consumer discretionary sector was gaining some strength. Remember, this is where the consumer demand destruction lies. And so that's the sectors that we're going to be looking at. Okay, so when we dig into this, let's dig right into our sector. So we're going to go into the consumer discretionary sector, and I basically right here mapped it by the strongest in the sector, right? For a while, the strongest sector was Carvana, but guess what? On Friday, they signaled a reversal of sorts from this attempted recovery. You want to be paying attention to this Carvana situation right now because nobody's buying these inflated used cars. By the way, these used car dealers during the inflationary period, when used cars are selling almost as much as new cars, they bought, yeah, those inventories still exist. And now they're probably selling these cars at a loss, if anything. We're not going to look at Chewy, even though Chewy has been really taking it on the chin, just simply because 27 bucks is just not enough moving power for us to look at. However, Dick's, okay, has been strong. GameStop, you know, GameStop is one of my recovery plays, and henceforth, you're going to see what happened to my small account challenge. Yeah, hey, you know, hate to break the news to you, but that account is blown, so we have to talk about what happened. There's a separate video coming out. We'll talk about that. We had AMC as a playoff of that. But regardless, we're looking at a couple of things. Is that Williams-Sonoma is coming back into vogue, right? Remember, we made a crap ton of money shorting Williams-Sonoma 3 weeks ago and into the earnings and beyond. But now we have some potential that we're looking at. Okay, there's a whole slew of things that are going on that basically is going to give us a great trading opportunities, but in the consumer discretionary sector, it has tried to recover and now it's stalling, folks. And so this is the area that you want to be looking at. Okay, let's look at another sector within the technology sector. Okay, in the technology sector, guess what? We successfully identified, and a lot of people are asking me, how in the hell did you pick out First Solar and Enphase, which was a huge winner this week for us? All right, and of course the whole sector is down 9.7%, but we're going to be focusing on computer hardware and see what's going on at the king of the hill, which is the semis and computer hardware. And once we look into that, you're going to find out that the renewables, there's a lot of meat left on that bone, but you don't want to short the whole. Okay, folks? And I'm still bearish on First Solar. Okay, we took some profits off the table on First Solar and Enphase this week. Actually, Enphase was like an 18x type of trade. First Solar is getting there, but we need to understand that nothing goes down in a straight line, especially this week that is holiday shortened. Okay, so let's look into what's going on into the semiconductor space. Okay, and or communication space. All right, and then we'll go back to semiconductors. Um, I group it into the weakest to the strongest, but the strongest is where the trend reversals are going to come, right? Did that make sense? Look at Spotify is beginning to turn, okay? And I'm not going to do the entire technical analysis on this, but I just want to show you what we're looking at as a group. And guess what? I know I've been talking about Meta. Yes, it's been on my watch list for a while. It's frustrating as hell. It's not diverging anymore. It's moving higher, but on Friday, it started to reverse. So we got to pay attention. Meta's scary. They just keep going up and up and up, but eventually it's going to have to come back down, right? Netflix is showing weakness, okay? All of these complexes that we talked about, right? I mean, we're not going to touch Trump because the IV is just insane. But we are looking at Google. I mean, the usual suspects, they are turning, okay? And so we need to really pay attention to this situation, right? The other one that might be interesting, really, not might be, but is, I mean, if you look at Spotify, has been going up nonstop. There's going to be sector rotation. This is telling you there's probably a sector rotation coming out of this sector. Let's look at the semiconductors, okay? This is one of the most powerful tools you can get. You can see that based on their performance and then the sector rating or Scudder. I'm just going to go with the strongest one. Guess what continues to stall out is, and this is like 3 weeks in a row now, is NVIDIA. Okay. We got this Nova measuring instrument. Okay. But if you really start going down, Micron reported earnings. There's more meat on this bone, folks. Okay, it's not over. The one that's really interesting is something called ARM. And ARM is already beaten down, and it's right here. This ARM holdings right here. Okay. And I don't do Wolf Speed because, and it's so weak, it doesn't really have a rating. However, it was down about 1.99%. And then this is something that we are going to pay attention to. It is weak. And if we do start getting that impulsive sell-off, and it's close, guys. All right. I'm not going to say it's going to happen this week, but it is close. We need to be building positions in that situation. All right. So that's what we got on the sector analysis. Let's start looking at our directional indicators. We already saw the fear and greed. It's simple, right? For a while, this thing had me worried a little bit. But the McClellan Summation Index, after popping a little bit during the week, and I expect this to chop around here, but it is back to giving its negative signal, okay? But this is something that we need to pay attention to. The MACD histogram was diverging all week, all last week, and I pointed out we're about to make a bullish cross. That is a signal. If that happens, what a great time to maybe engineer a rally into the 4th of July weekend and then drop the market. Okay. Remember, we are still in a short rip environment. Seasonally, though, it should be bullish. But because my MSI, McClellan Summation Index, has been saying as the market was going down, I mean, this whole time the market was going higher, Summation Index was going down. Why is that? It's because of the breadth. There's only like 4 or 5 stocks holding this market up, okay? It's engineered that way, along with the rig job in the 10-year treasury and the dollar interventions, along with supporting the banks, because God forbid banks fail, but banks are at a weakest and most precarious level possible. And then if you haven't seen, every Friday they are pumping these banks higher. You got to short those rips, okay, even if it's for a short-term trade, okay? Now, let's look into our put to call ratio. Put to call is basically range bound from here to here. And we popped a little bit during the week, and we're back down to what? 0.640. So we're ending the week slightly higher, okay, than last week. But, you know, put to call ratio, it is suppressed, okay. And also the summer, summer season is very low in volume because all the traders have gone away. The question is that are there going to be a bigger move coming? And if it does come, and the probability says that we have a pretty large volatility coming, it's going to be quick. folks. And so I'm kind of on both sides of the fence. Okay, I'm preparing for that volatility to come. I just do not think it's going to come during 4th of July weekend. Okay, 4th of July week, trading week, when 2 of the days are half days and whole days of being closed. Historically, the markets tend to grind higher, but with really big choppiness, right? But you never know. I mean, these indicators are basically telling us that something big is coming. I just don't know when, but it's soon. All right. So when we look at the SPX, weighted and unweighted, you can see that the unweighted continues to diverge, right? So if you look at where we're at, I mean, we're just basically diverging, and basically the divergence is increased. However, we're going higher here, but look at the standard. Okay, they're flattening out. So this is cluing us into that perhaps there is a momentum that is waning, but also it's warning you that the market top is here. And that's what I talked about in the middle of the week. I warned everybody that market crash is on the horizon. I didn't say today, I didn't say tomorrow, but it's soon. Here's the thing is that there is I told you I was like bitching and moaning about Meta. So from the top, Meta is stalling right here, but we just kind of started to move out of this channel right here, right? And so Meta is bullish, but it's running into resistance, and the sector report is telling you that it's beginning to form a top. Okay, so this has a lot of meat on the bones. All right, when we look at Apple, right? Apple, basically has been kind of leading the way down up. Now it's diverging. What's not diverging is Tesla. Basically, Tesla is now forming a bullish move, but can it get above here? Okay, then of course our big one, Nvidia, there's no doubt about it. We broke down through this trend line, and we're breaking down, and we have a bearish trend line forming, which is an impulse wave that's forming. So what's happening right now? I think Meta is basically hitting the top end of its extreme range. I think Meta and Nvidia are telling you that there is something going on with them. And you remember, Meta and Nvidia, especially Nvidia, has been leading the market higher. So we need to look at that. Now I compared this to the Dow Transports. Okay. So the red line is Dow Industrials. Look at that. It's still forming that bearish trend line. And then we've got the trannies basically still maintaining this downward trend. Yes, it has been on an uptrend line, okay, for the last, few weeks. But comparatively speaking, it's basically has been diverging. And now as the Dow Industrials are basically showing a bearish divergence against the transports. Okay, we got to pay attention to this. Okay, I just think it's going to be very tricky. I think a rip your face off rally is on the horizon, not before the major sell-off. But I don't think it's going to last more than 3 to 5 days. Okay, this is the same take on that same thing. I told you that we are basically breaking out above on the trannies. And, basically Dow Industrials have maintained an upward trajectory. The question is this forming some form of a downward move coming right now? So we need to pay attention. Signals are muted ahead of the 4th of July shortened week. 10-year Treasury. I said we're bottoming out here. Breakout, a further upside is coming. Okay. Continues to find support in this area. I do believe we're going to start targeting higher. If this happens, it's going to be very negative on the banks. When we look at these areas, we have a MACD crossover. Okay, we have a positive histogram. CCI is very bullish, breaking out after it broke out from this channel. Okay, so it's important that we understand these dynamics going on in the TNX. Okay. All right, so we had this PPO crush indicator. Now they're widening, so we have further upside coming. US dollar, what's going on? Okay, and they've been moving in tandem, which is bearish, and we're going to talk about that. So US dollar has been moving steadily higher from this bottom. We talked about this, and this is from that old chart. And so we're maintaining. We're just bouncing off of this trend line. The question is that are we going to be coming in to this downtrend line and then start reversing. Okay, only time will tell. If it gets above there, it's moving higher. It's going to be disaster for the markets. Okay, let's look at the SPY. Only thing that you really need to know right now is that we've got a tail candle and we're stalling at similar levels. We've got basically RSI that continues to diverge. All right, but here's the thing that you should not be ignoring. Okay, is this sell-off volume. Okay, so can we hit that 538 level and then fill this gap at the 535? Of course. Okay, but but the only thing that's confounding us, obviously, is the fact that there is a 4th of July in the middle of the week. All right. You know, I don't expect too much to happen. It's a great time to be building your positions and trading opportunistically and scalping. NVIDIA, what's happening with NVIDIA? NVIDIA, since it's topped, is forming this what I call bear flag formation, right? Just roughly, just basically, we've got this situation, right? So that flag, technically, it's 60%, 65% of the time should break lower. We've got a RSI divergence. There's just this volatility area. Its gaps go lower, folks. All right. Don't sleep on this NVIDIA situation. NVIDIA is going, if we're going to get that correction, I mean, this is, you know, you're not too late. We've been nibbling on these NVIDIA trades and being opportunistic about it, and along with ASML. Right? I think it's fantastic. Let's look at really quickly about the NVIDIA weekly. NVIDIA weekly chart says it all, right? We topped here and then we had a bearish week. So we're now having continuation. Excuse me for these things, but try to get this thing out sooner. We have a potential death hook forming on the MACD, right? And so let's look into it. And then, of course, we have the divergence is forming on the histogram on the MACD. CCI obviously has also diverged. It could not get above this area, right? Oh, shoot, I pushed the wrong one. Okay, here's the divergence, and now we're right down here. Stochastics has already rolled over, so that's something that's very, very important to note. Okay, and so let's roll down. I mean, let's look at the PPO-ADX. It's forming that what I call the crush indicator, right? And that crush indicator is telling us that it's doing this now, right? It's beginning to do this. That's bearish, folks. We're at the all-time highs near the accumulation distribution, which means that trend reversal should be coming on this NVIDIA. It's going to be a doozy. Look at the ATR at the extreme range. Once we break down below here and then start moving down, we're going to get impulsive on NVIDIA, okay? It's just going to take a few more weeks, okay, of patience. Costco. We said Costco topped, and we've been building our position. We recognize that. Again, just like NVIDIA, you know, Costco is moving just like NVIDIA. Everything is the same, right? We have rising volume. And then, of course, MACD crossed over, gave a signal a long time ago. This is a longer term. You know, you need to buy 2 to 3 weeks out on your premium, okay? Obviously, CCI is negative. We have Stochastic that basically has a lot more room to go. Look at the PPO-ADX forming this nice and expanding this bearish formation, okay? So Costco that's what's happening right now in Costco on the daily. But on the weekly, look at weekly, this is what we called. I said, hey, look, Costco's probably topped. It's buying some time down. We have the RSI coming down. Okay, so this is more of the longer term view. MACD, histogram, bearish. CCI, bearish divergence. Stochastic just rolled over, and look at this, folks. We are just fresh into forming this bearish divergence, bearish formation on the PPO-ADX. Learn more about my PPO-ADX crush indicator, and you will not be sorry. The one that is pissing me off, though, is CMA. And yes, we're taking it up our butts a little bit on CMA, and that's what happens when you play with fire. Where the Fed is basically just manipulating the crap out of the banks. Like, people don't know the banks are in trouble. I guess there are some people that do. But regardless, this is the weekly. We're running right into that downtrend line and at 100 SMA. And then, like I said, they intervene on Fridays. And you want to see something crazy is that this, okay? This doesn't happen, folks, in normal accumulation. That this is all entirely rigged in terms of the banks stepping up with the Federal Reserve, because banks cannot fail. Here's what I will warn you though. Banks are at the lowest extreme range of ATR, and that ATR range is going to explode. That means that the prices will come down. Just got to have patience. Don't give up on this trade, but you're going to take some losses like we are along the way on the banks right now. Okay. The one that I just came up to me, and this is a shift because I'm bullish on FTNT right now. I think it's one of my bottom plays, and it's formed a nice little support level right into here. This is kind of that market structure where it basically found support again. It does need to get above this 50 SMA. We do have some positions on these. I think it's easy to target these levels all the way up back into here once the rally starts to get going. We've been having predominant volume. I can't aim. Anyways, so that's what we got. I mean, look at this. We got a nice little MACD histogram and MACD crossover. CCI is bullish. Okay. I love this trade, folks. This is a bullish trade, and I think it'll continue to go up. Okay, here's our PPO ADX, right? I think this will continue to go up even if the market kind of falters a little bit, okay? And so what we got is I don't know if you see it. I know it's a little bit of a minor move, but it's basically has this crush. That's the crush, folks. And I think it's going higher, okay? We're near at the top of the accumulation and distribution. So there's been silent accumulation that's been happening. You like these type of accumulations. And then look at our, because it's been selling off, but look at what's happening right down here. What's been happening is on the ATR, I use this a lot differently. Okay. As it breaks out of this trend line, which I think it has, comes down and then move higher. Okay. And then that will increase the price. That's happening. So I'm bullish on that. FTNT real quick on the weekly. All right. Oh, Brandon, but that looks kind of like, I don't know. Isn't this like a head and shoulders forming? Could be. It could be a larger one, but doesn't mean that it can't retest that neckline up into the 70s before it comes down. This is just a trade, folks, but I think there's a big range expansion probabilities. When you look at it, I'm doing this in real time, so excuse me. We have the RSI now be breaking out bullish. Okay, we're beginning to have some bullish divergences on the MACD, and we're about to form a MACD crossover on the weekly, which means that this probably has a very large and significant upward move. Look at CCI. Okay, it's bullish. Okay, breaking out, right? And we have a crush formation forming almost, right? It's not completed yet. That's why it's early. But I think there's major, this is a 10x trade, folks. Okay. Now, Lulu, all right. Lulu, patience is required. I'm still bullish on it. Okay. But we have some MACD that basically says there's some shorter term downside, maybe down into the 290s before it breaks out. I still think we're going to take out this 340 and 360 all the way up to 407 once the rally gets going. Perhaps it happens after the market, but this is what we need to resolve though. Okay. It is clearly showing us that we're having some bullish points, but now this is going to push this higher. So it's a tale of two cities. One is that the daily is bearish, so we had a short-term price movement, but when you go into the weekly, we broke out of this downtrend line. Yes, we'll probably come back down into this area, into this green box. This is zone of support that I'm talking about. But, obviously MACD on the weekly is continuing to show you that something big is going to happen. Okay, this is why I'm bullish on it. And we're buying more time. If we run out of time, we're going to add more, obviously, for a few weeks out, 2 to 3 weeks out. And I'm targeting the 340 calls at this point. Okay, so I'm not going all bearish, but this is why I'm in it. This crush indicator is telling you a rip your face off rally that when it happens, you're going to go, geez, I wish I had it. Well, no pain, no gain, folks. All right. So we're back to the sector analysis. When you look at it in total, okay, it is screaming at you that the reversal is coming. Just be careful about the 4th of July shortened week. Real quick, what I'm telling you, why I think that the big, huge reversal sell-off is coming, it's going to be short-lived, is because they're both moving in tandem higher, okay? Fed wants this TNX below 42.5 to say that they're winning the war on inflation, but I really don't think that's what they're after. I think they're doing this on purpose, but as long as they move higher in tandem, okay, dollar being above 104 right from here, is a significant deal. It's telling you, no matter how much they're propping up the markets, there's sector rotations out of the ones that was driving this market higher. We got to focus on those areas, okay? Don't get fooled and don't become exit liquidity, all right? So there's divergences galore, and some not since 2008 financial crisis. I said this in the last video on Wednesday, and I still stand by it. I think there is something big headed for the banks. The way that they're propping up the banks tells me that they're worried about something. But you know what? When something breaks, it's going to be a cascade of events. All right. So time to eat some humble pie. All right. And this is probably why my mentor of 35 years told me to do the 73, knowing that I would fail. But I'm not going to give up. $73 challenge will continue. But I do believe it is a bit extreme. I kind of wanted to see, comment below. I mean, you can ridicule me and say I'm full of crap and whatever. But I'm not going to give up. But I'm thinking about increasing it to 120, maybe 500 to 1,000, just simply because I have a wiggle room so that I don't do these YOLOs. But, at 73 bucks, you got to take your shots. AMC options trade did not work. It doesn't mean it won't work. But, I need to be looking for something a little more substantial. At $73, though, I mean, it's just, it's left to day trades and things like that of that nature. And that's not what we're talking about. We talked about the parameters, but I will have more videos coming on it, but right now, okay, I'm 0 for 1. Okay, so here you go, 0 for 1. As if that's not, I mean, the probability of success was so low, but I think that being persistent, we will be able to do it. The question is, should we increase our position size? I do want to keep it just for shock value, because I think at 120, it's doable. Okay, at 73, so maybe, but you got to take a lot more shots. At 500, it's definitely absolutely doable. Okay, so let me know. Comment below. But here is basically, I think there's $1 left. All right. So, but anyways, this is basically what happened on AMC. I think AMC is still coiling, but it's just it's not ready yet. I think as the market starts crashing, I do believe AMC will rise. Okay. So summary keys to next week. US dollar and 10-year treasury continues to move in tandem, and it's rising, and that's bearish. That is why I am telling you, based on other factors, that it's right on the horizon. Okay, don't sleep on this. There is continued bearish candle formation on weekends on major indexes. SPY, we went over that. There's continued divergences galore. MSI signal is bearish, but there is MACD histogram bullishness. That is what is kind of why I'm saying this is going to be a short-lived but very sharp sell-off, followed by rip your face off rally, and you got to prepare for that also. We're watching specialty retailers, communication stocks. There's continued bearishness in renewable energy, in technology, right? We picked that out. We made a crap ton of money off of for solar and Enphase, and I think there's a lot more meat left on that bone. The semis, I'm watching closely. NVIDIA and ASML has given us great opportunities, and I think that we need to be looking also at ARM. And then computer hardware, obviously Apple's and SMCI is something that we need to be watching. So watch list is NVIDIA, MU, ARM, Amazon, CVNA, Carvana. I think that's going to be a big one. Okay. Spotify, going to be a big one. Meta, Google. All right. Scary, but they're saying that they're hitting a potential trend reversal here. And then Dix. Okay. That's been like a Teflon stock, but it's showing that there's money moving out of there. Sell-off will be sharp and quick. Look for candidates for the bounce. All right. Rip your face off rally. So we've been tracking Lulu, RH, and Tesla last week. And I thought Restoration Hardware would go down lower, but Friedman, their CEO, ended up buying $10 million, and they've been buying back their stocks at 212, and that didn't break. And we talked about it. There's a few of my traders that I kept them in thinking that it would break. And everyone makes mistakes, but we can come back from this. Okay, but Restoration Hardware, knowing that we would probably bounce, but Lulu is the one that's lagging right now, but I think Lulu has the biggest upside. We got to have patience on these. Okay. Bottom line, big, sharp, scary volatility is headed our way, but it's not going to happen during 4th of July shortened week. Maybe it will, but we got to be on our toes. You know, you should scalp out of this SPY. I think there's still a chance to go below 340 to 330, not 340, 540 to 538, 535 level. Okay, but it's going to get choppy. It's going to have that wide, choppy range. But on Friday, I think it's just going to be a nothing burger. Okay, with a slightly bullish bias. Conditions are critical, folks. So basically, trade accordingly. Follow us at Galaxydoc. Thank you so much for lasting this way. It's 40 minutes. Like us, share us, above all, comment, good and bad. Okay, please subscribe. If you want to learn about working with us, I do have an introductory, not introductory, but actually a very good, affordable plan if you guys just don't have the cash or whatever, but want these type of analysis in real time, as well as getting these analysis that before I post them on Twitter or on YouTube. This is the way to go. I mean, I think my watch lists are worth it, weight in gold. Anyways, let's get some alpha. Be careful out there. Remember, have a happy Independence Day, and pray for our country, I guess. I mean, that's just the way it needs to be. Anyways, until next time, and I'll see you later.